Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. Hope you guys are having a great day like always. In today's video, I'm going to be recapping the fourth quarter earnings for BlackBerry stock that was released on March 30th, 2021. Now the question is, what now? How are we going to move forward? Is BlackBerry still a good long-term investment? Was it all bad news for this earnings? Is there any good news? Is there any silver lining? So I'm going to be going through all that in this video. This video is going to be jam-packed with a lot of good information. I highly encourage you to watch it all the way to the end. Now, quick disclaimer before I begin. I'm not a financial advisor. I'm not a professional. And everything I do share with you guys is just my opinion. It is not advice. So please do not buy or sell based off of the information I give you or the opinions I do form. Please do your own due diligence and research before buying and selling. I do own shares in BlackBerry, been holding for 6 years, so I'm a long-term investor overall. And also keep in mind, be overcritical when you're watching these because I could easily be biased or too optimistic at times because I do own shares in BlackBerry. Okay, so now if we look at earnings, in terms of what the street was expecting for earnings per share, it was 3 cents and BlackBerry meant that, so that's great. And the problem is, this is where they fell short. So the street estimates for revenue for the quarter was $245 million. Unfortunately, BlackBerry hit $210 million for GAAP revenue, $215 million for non-GAAP revenue, which fell short of the 245 street estimates. Now, there is a silver lining to this. In my last video, I stated that if you don't account for the patents legal stuff in terms of Facebook and BlackBerry in this quarter and the patents being sold in this quarter, then if you looked at the hard numbers, you could expect $235 million for the quarter, which still falls short of the street estimates of 245. The thing is, though, that $235 million was accounting for patent revenue licensing. These numbers, this is a silver lining. They don't have patent revenue licensing in them. So it actually was like pretty good quarter if you are going to account for what I'm going to state right now. So this is the problem. And this is why I say do your own due diligence and research before buying and selling, because I'm not a professional and I missed this. Even though this does make sense, I just was not necessarily aware of it until now, and now it makes sense. So while they're negotiating patent sales, they do not collect patent revenue licensing on basically those patents, because that amount of revenue is just going to go to the person who bought the patents anyway during the negotiation time. So the reason why that's significant is because if we look at the GAAP revenue of $210 million right here, so you can see right here, without the patent revenue licensing, it's horrible, right? But if you took at the normal patent revenue licensing, which is $250 million a year, which they stated in the conference call, by the way, divided by 4, because there's 4 quarters in a year, equals $62.5 million per quarter. So if you take $210 million GAAP revenue plus $62.5 million revenue in terms of patent revenue licensing, added up equals $272.5 million. That's what the actual earnings for this quarter should have been. That actually beats the street's estimates of $245 million. That's awesome stuff. The only downfall that would have been for it was, in my last video that I stated, was they needed to pass $291 million because that's the year-over-year comparison in terms of quarterly report earnings for fourth quarter. So it's right here, March 31st, 2020. I was counting for non-GAAP revenue 291. They actually need to, because I'm showing you the GAAP calculation, they need to pass $282 million of GAAP revenue. So that is pretty close to 282. It is not a beat. That would have still been technically a downfall, but this is the also part of the silver lining. This 282 was technically before pandemic because the fourth quarter ends at February 28th. So yes, technically the pandemic was kind of starting a little bit, but it should have not be really reflected in this number. Again, like I said in the last video, even if it is, it's pretty much 9-10 million max kind of thing. Again, I don't know 100%, I'm not a professional, but that's what I would assume. So either way, this $272 million that we just calculated, that would have been the actual revenue earned if patent revenue licensing continued as a normal revenue stream. Then this $272.5 million is during a pandemic plus with chip shortage, which I've mentioned in the last video, which I'll elaborate more in this video a little bit, but mainly in the last video I elaborated. So that's actually pretty good. And this is the silver lining. Technically, knowing this information, you could hypothetically, again, be overcritical when you're watching these videos, because I could easily be too optimistic in this point, is you could be hypothetically getting these shares at a pretty good low price, because you know that this revenue was actually pretty high hypothetically when it doesn't have the patent revenue licensing in it, right? So that's actually pretty good in my viewpoint, or in my, like, the way I'm looking at it. And you could be like, well, isn't it bad that they're selling these patents, right? Like, wouldn't they want to continue this $250 million per year revenue? Well, the thing is, though, these patents, they don't use them right now. So, which goes against from the 250 argument that you're going to say, but I'm going to elaborate more overall. But they don't use these patents right now besides licensing them. So they're in the cellular, networking, and messaging, which messaging to me relates even more to the Facebook portion that they're going to buy these patents, right? And the second thing is, though, these patents are going to expire soon. And I'm assuming they're going to expire in the next 7 years, because in the call, John Chen mentioned that there's going to be a massive lump sum in the very beginning to purchase these patents. And then there's going to be 7 years of payments, licensing payments, but it's going to be close to zero. The reason why I'm mentioning that is because, yes, they had a small amount, like limited patent revenue licensing coming in within the quarter, but since he mentioned that the next 7 years is going to be like close to zero in terms of patent revenue licensing coming in, it looks like the ballpark of the patents that they're selling is what they're getting majority of their patent revenue licensing from. So I think it would be fair to say, like, I guess you could take off 2.5 million per quarter if you wanted to, but he said it was close to, like, it was not like negligible. So I guess it would be 270 million if you want to be the conservative with the numbers, right? Another thing that you might say is, well, it doesn't matter because this patent revenue licensing didn't come in this quarter, so who cares? I don't want to account for it. Well, the way I'm looking at it is it's just deferred payment, right? Because at one point they're going to get this money sooner or later, and they're going to get it in a future quarter, right? So if they're not getting this 62.5 million right now, just like they're holding out, not collecting it right now, because in case if somebody buys patents, then they have to just give this money to them who buy the patent during the negotiation anyway, right? Then it's just fair enough to say that when they get that money in the future, then technically the company's still getting that money, right? So that's why I think that this is still fair to say that this earnings would have been really good, if you think about it, if they actually just had the normal operations of patent revenue licensing coming in. So that's awesome stuff. Some people are asking, how much is this payment for these patents going to be? Since they're holding off on the majority of the patent revenue coming in, patent licensing revenue that's coming in, then that means the ballpark of the patent revenue licensing per year will be earning them 250 million almost, right? Like I stated, you could take off a couple million here and there, but if you take 250 million and then multiply it out for the next 7 years, so I'm assuming that they want to make a good deal, and if it's almost to 2 billion, it's 1.75 billion, by the way, just to be exact, then they would at least get somewhat of almost a billion. And the reason why I'm saying that is because the patents being bought has to include, if it's Facebook, then it has to include the past amount that was agreed on by the court settlement, right? So they have to back pay plus buy the patents for forward outlook, right? And then yes, they're going to be paying a little bit, but it's close to zero. So I wouldn't really count the next 7 years baked into that purchase price of the lump sum fully, right? So overall, I'm expecting essentially somewhere between $500 million to $1 billion, somewhere around there. It could be a little bit more, and this is the reason why I'm actually kind of thinking closer to $1 billion as well. So during the call, John Chen stated that, so if you know John Chen, right, and I've been holding the stock for quite a while, I've been listening to the conference calls, the one thing you'll notice about John Chen is this guy does not fluff up anything. Like, if anything's going good, he's just like trying to cover himself, like not cover himself, but like trying to make sure that they account for worst case scenario, and he just states hypothetically what the worst case scenario could be. So he's completely conservative in terms of the numbers and all his stuff, etc., etc. When he said it's a good amount, and like he seemed pretty confident when he said the patents that are going to be sold is going to be a good amount for the lump sum, I was just like, that to me confirms that it's really close to $1 billion, maybe a little bit more. Again, it all depends how much Facebook has to backpedal. It depends if Facebook's actually purchasing these. It depends how, like, a bunch of variables, right? So now if we come back to the 675 million to 715 million for the next year in terms of fiscal year 2022, or technically this fiscal year coming up, then it technically falls short for the year over year. And this is forward outlook, by the way. And I understand why people are like technically dinging it for year over year because it's a decline. fiscal year right here, 2021, they got 919 million for non-GAAP revenue. By the way, moving forward, they're going to combine non-GAAP and GAAP revenue as one, as GAAP revenue only, and just only represent GAAP revenue. But either way, and then total GAAP revenue right here, 893 million. So obviously, let's just say if we're looking at GAAP revenue and they're targeting 715 GAAP revenue as best case scenario, that still falls short of 893, right? Clear indication as to why it would be dinged. But this is the thing. These numbers in terms of cybersecurity software and BTS overall, which is Ivy and QNX, this does not include patent revenue licensing. Also, it doesn't include the patents being sold. And the reason why it doesn't include any of those is because they are unaware if they're going to sell the patents, or they're unaware that if patents don't get sold, then then they're going to continue with patent revenue licensing, but they don't want to include that in the forward outlook because they're unsure of the direction. So what I want to show is, hypothetically, if we were looking at a normal year and you added 250 million, which is the normal amount of patent revenue licensing that they take in, then you're looking at 925 million to 965 million, which beats expectations, or not expectations, but is year-over-year growth. That's awesome stuff, right? So that's great. And it beats the non-GAAP and it beats the GAAP revenue. So that's awesome stuff. The only thing is, though, this is the thing. Because they're going through negotiations, they mentioned 100 million for patent revenue licensing for the year if the patent sales don't go through. And the reason why there's a disconnect of the 250 million to 100 million for patent revenue licensing is because what's happening is John Chen stated that if the patent revenue licensing does not go through, it'll take them about 2 to 3 quarters to get back into patent revenue licensing, like the ball rolling back again to come back to full throttle. And if that's the case, then essentially if you have the third and fourth quarter coming in, it would be about 100 million remaining for patent revenue licensing to come in for those quarters. So that's the problem. So the reason why it's not a full 250, I included 250 here, just if you looked at it as a normal year of revenue, including patent revenue licensing. But what it's actually supposed to be is technically, if the patents don't come through in terms of sales, then it'll be 775 million to 815 million, which, if you're looking at that, still falls short of non-GAAP of 893. So technically it would be year-over-year decline, and that's only because of circumstances of the patent negotiations. So what I'm trying to get at is, technically this whole entire thing got destroyed because of the patent negotiations. It's gonna be good if the sales goes through, because then technically nothing's missed. If the sales doesn't go through, then it's a weird situation, because maybe it might be fine because the Facebook settlement has to come through in terms of like the legal settlement stuff. So I don't know how it's going to work out. I don't think that this accounted for it. If it did account for it, then they were expecting that the end of third quarter was going to come in and somehow Facebook doesn't owe that much. I don't know. It's kind of strange. Obviously, they can't disclose much about the Facebook stuff, so probably that's why they didn't include some massive numbers or something, because then people would have been like, what is that disconnect completely? Because there's a connection here, but there would have been a disconnect if it was like 400 million right here. If they're thinking, like, you know what I mean? Like, they would have been like, why for the whole year you get 250, but then the last quarter and a half or 2 quarters, you get 400 million right here, right? So now I'm going to talk about the cybersecurity side, specifically Spark, and then QNX and Ivy system, so their BTS side. So in terms of Spark, it's just the early phases right now, but there's already good signs. They got repeat customers coming back, so that's awesome. And there's another silver lining that I'm going to talk about, but it's growing and it's doing great. And the silver lining, I'm going to get back to it, but first thing I want to talk about, the main stuff, is QNX. Technically, Spark might be main for the time being if you're a short-term investor, but I'm going to get back to it. But for QNX, it's recovering, and you might be asking, recovering from what? Like, why is it getting impacted? Well, the pandemic slowed down auto sales, and because of that, QNX really relies, because it's not reoccurring revenue, it's not structured in that way. It relies on like part installments per vehicle, and they got like a unit price per, like they only get one-time fees from each vehicle. So if vehicles stop getting produced, then that revenue starts slowing down. So now that's recovering, that's a good sign. Now for the Ivy system, huge plus. If you don't know what the Ivy system is, I explain it in my video where it says, is BlackBerry undervalued, in more in depth. It's the $180 valuation video. So in terms of Ivy system, I thought by the time it was going to pick up, it was going to be by end of 2022, and by the time sales kick in, either end of 2022 as well, or early 2023, or sometime in 2023, right? Instead, what happened is they stated in the conference call that by the time they'll be done the Ivy system in October of this year, and then they'll start shipping it out in February of next year, so early next year. That's awesome stuff. That's way faster than I thought, and it's really significant, and I'm gonna explain why. And by the way, it came to a shock to me, even though I know that they worked on a smart city or smart village kind of thing with the Canadian government back in 2016. So they've been prepared for this, but that's not specifically the Ivy system, but it's one like branch of the Ivy system application sense, right? The thing is though, if you watched an interview with John Chen, he stated that they've been working on the Ivy system in general sense before the Amazon partnership, 2 years before they partnered up with Amazon. So they've been working on this for a while. It's not like they just partnered up in December and started working in December and then just finished it or going to finish it off in October. So overall, it's pretty much almost a 3-year project. So this is why I'm optimistic for the long term. John Chen has a great vision for the future. Yes, things look like things are moving slow overall, but it's because things are happening in the background that they can't just come out and say things. Because, for example, for the Ivy system, if they started publicizing about the Ivy system before they even had it out, then competitors would start coming in. That's why you can't necessarily say what you're working on right off the bat. You have to have it developed, commercialized, and good to go, and then you could almost say a month before you have it out, right? So that's kind of thing. Again, it all depends company by company, what they want to do and all that stuff. But essentially, the reason why I'm saying this is a silver lining is the faster we get the revenue from data collection of vehicles, the faster the revenue grows. And the plus side about this is because John Chen stated in the conference call, he mentioned that the car data collection year over year revenue, not for BlackBerry alone, but just the market in terms of the overall market, not revenue, sorry about that, is 450 billion to 750 billion year over year. That's massive. And to put that into context, right now in 2021, the market, year-over-year market overall for cybersecurity is like less than 200 billion year-over-year at the moment. Yes, it's expected to grow. Its growth for the cybersecurity side is anywhere from 10 to 15% year-over-year. So that's why when, like, for example, BlackBerry year-over-year growth is pretty much in the ballpark of 10 to 15%, sometimes 20%. That is the average market growth for cybersecurity side. So overall, stuff is moving great. So now I'm going to jump into the cybersecurity side in terms of Spark because that covers the short term. And then I'm going to get back to the Ivy system because there is more stuff to mention for Ivy system. But that's more for the long term. Now for Spark, the reason why I'm mentioning it is because yes, it's in the early phase. And like I've showed in the past video where there's an interview with John Chen. I believe it was literally my not last video, but second last video where it's the Q4 overall kind of stuff. He mentions that they're going to be stepping into the competitors market, and that market is a lot easier. And in the conference call, he mentions that the entry barrier to that market is really easy. So the market that BlackBerry is in is more the governmental side, and you need to have like pass way more higher security levels in terms of security thresholds and all that stuff, et cetera, for having the CIA levels passed and NSA levels passed for security. And the reason why that's important, we could have saw with like the recent hacks with SolarWind, BlackBerry did not get affected. So having those levels is even better. It's more credential. They got the name brand and all that stuff. So now if they go after that market, for example, like CrowdStrike's, it is a big market. They don't necessarily need to go like after their revenue. It's just because that market's growing and growing and growing. There's enough profits to go for everyone hypothetically. So if they just match that growth and go up there, then they could get the same growth as CrowdStrike, like I've mentioned in the past, where, for example, CrowdStrike's market cap is about almost 39 billion, but right now BlackBerry's market cap is around 5 billion. So there is a disconnect. Yes, government contracts are bigger, but the problem is when you have like one customer, how big is that contract? Like when you have way more of a market, bigger market, even those contracts are smaller. When you have more of smaller contracts, it could surpass that one massive contract. That's the thing. So that's why Spark is important in tapping into that bigger market. And now this is where they could start catching up. The only problem is it's in the early phases. And in the contract or in the conference call, he mentioned, yes, they have returning customers, but by the time they'll see a bigger ballpark is, he said, by the end of the fiscal year of 2022, which is third and fourth quarter. So basically December end of this year and next year of March. I would, if I had to bank on it, I would probably say March of next year. So Spark revenues will start coming in dramatically by then, and that's a positive sign. So that's great stuff. Now, another reason why that the fact that BlackBerry is entering into like the CrowdStrike market in terms of cybersecurity side, besides it being a bigger market, is the fact that BlackBerry is the best at security overall. And you could, like I stated earlier, clearly see with the security breaches that have happened with competitors in the same market as BlackBerry is in right now. If you bring it down to the lower level where CrowdStrike is, if it's already on the top when it comes to the higher levels, then it's going to dominate the lower levels. But obviously they need marketing and all that stuff, which they are stepping up in terms of marketing. So that is a benefit. And we'll see Spark, I think personally, start like hypothetically getting revenue way like a lot quicker overall in terms of the company. But again, in the third, fourth quarter. So here's what the steps will be in terms of like short term to long term. You have the patent sale. That will be in the short term first in the next quarter or two. Then you have the Spark revenue coming in like the third, fourth quarter. Then you have the Ivy system coming in thereafter. The Ivy system will not necessarily be in the fifth, sixth, but it'll be like going on for, hypothetically should be in the fifth, but by the time it picks up, it'll take a little bit more time. So now if we get back into the Ivy system, John Chen mentioned that this technically doesn't correlate with Ivy 100%, but it's good for the same market. He mentioned that they're going to have an executive coming in soon that is coming from a major automaker. And that's beneficial because if he's coming from a major automaker and executive, hopefully he has enough connections in the auto industry that will benefit BlackBerry in terms of like technically free advertisement, right? Connections and all that stuff. Okay, next is, I'm gonna say something really important, but before I get to that, in terms of EV companies, in terms of design wins, they've captured 23 out of 25 electric vehicle companies. That's awesome. That's a jump up from the previous quarter, which was 19 out of 25. So they're growing there. Now, the important part is John Chen pretty much addressed. So I'm going to address in the part two. I know I keep saying it. I will release it soon. But the part two for the $180 price target evaluation video for BlackBerry explained more stuff. But he essentially stated that they are not concerned of what the competitors are doing because what the competitors are doing is not the same thing as what the Ivy system does. And he sees that what the competitors are doing as more as partners than a competition. So I will address more about that in the future video. 100% agree with him, especially from what I've researched and all that stuff and what they've stated in the past. What, for example, like the Google and Ford partnership, that is more a partnership with BlackBerry as well, as opposed to the competition. And there's others like companies that we can mention here and there. So that's great news. More that he basically stated that the Ivy system is way more advanced than all the other ones where they're not even competition. Again, more that they are partners than competition than anything else. So that is great. One other thing that he addressed was, like I've stated in my evaluation video in the past, is the smart city. So it looks like the ballpark of the Ivy revenue that he's trying to capture, which is the massive revenue side, I'm thinking all this other market branches that I've talked about in the past for the Ivy system is massive, but I could see why he sees that the smart cities is the one that's going to be getting the most amount of revenue. And the reason why is when you have all these lights communications and all that stuff, the clientele that's going to be paying most of this contract is the government side. And that's going to be huge because you have every city paying you in terms of government contracts and all that stuff. That's great revenue. The only thing is, though, that he stated in the conference call is that we're way too early for that. So it looks like, yes, revenue will be coming in for Ivy system. Yes, it's going to be great, like I've stated before, the insurance companies. And it looks like I stated in that video for is BlackBerry undervalued? What's happening is I clearly undervalued it in terms of my estimates. And like I stated in the video, I'm underestimating those revenues, right? Like I'm not underestimating, but I'm like keeping them completely conservative in terms of numbers. Well, the smart city is where he's targeting, and that's the major stuff. But the problem is we're in the early phases right now, and he acknowledged it in the conference call, and that's what he's going after. He's not necessarily, like, what I'm trying to say is what I'm going after is technically pennies on the dollar. He's trying to go for the behemoth, like the whole entire whale, while I'm trying to go for like the small fish. So that is technically great news, but that is way long in the future. Like my expectations, by the way, is for like end of 2025, beginning of 2026. He's going further out. I don't know how that's going to work out because technically his contract ends at 2023, but obviously could be renewed, and I think he'll renew it. But that's all speculations and everything. Okay, now in terms of chip shortage, it was mentioned as well in terms of the conference call. In terms of affecting QNX, yes, there will be a little bit of affecting, but the thing I want to mention mainly for is the Ivy system. It looks like in terms of like continuation and design wins, the chip shortage is not really affecting much at all. Like there is a little bit of things that are being affected, but it's not that much, so that's good. I was a little bit worried about that, but we're good and we're in the clear for that. Okay, so that's pretty much it for the video. Thank you so much for watching. If you did enjoy it, consider dropping a like. Helps out the channel a lot. Thank you so much for that. And if you do like videos like these in terms of stocks, other stock videos, passive income, mortgages, credit scores, financial freedom, consider subscribing. It does help out the channel. Thank you so much. And if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. Thank you so much again for the awesome support, and I'll see you guys in the next video. Peace.